Welcome to the Alain Guillot podcast, a podcast about life, leadership, and money matters. Our guest today is Mary Ellen Iskenderian. Mary Ellen is president and CEO of Women's World Banking, the world's largest network of microfinance and institutions and banks. She has written columns for Forbes magazines, the Wall Street Journal, and the Harvard Business Review. And today we will speak about her book, There is Nothing Micro About a Billion Women, Making Finance Work for Women. Mary Ellen, thank you so much for joining us today.
Thank you for having me.
So, this is a topic that personally I am acquainted with because I'm from a third world country and I have seen female members in my family struggle to get regular financing, and there is not only the legal barriers but also the lack of confidence and knowledge, and this is something that you have spent a lot of time working in, and I'm just eager to jump into this subject. But before we get there, I wonder if you could tell us a little bit about your background. How is it that you got into this field of expertise, and then the decision to write this book and share your knowledge with the rest of us?
Well, I started my career really in sort of more the mainstream of finance. I started in corporate finance and investment banking. But to be honest with you, I felt, very soon after just a short time there that sort of the aims of the finance and my own personal values were really a little bit out of whack. And so I really wanted to work in finance as a way of helping people, as a way of building companies, as a way of expanding the benefits of enterprise and financial services for more people. And so I was just thrilled when I was able to join the World Bank through the Young Professionals Program. And I was at the bank for 17 years and worked primarily in the financial sector. But as I sort of moved up in the organization, I felt like I was moving farther and farther away from the people that I had joined to help. And it became much more about, managing management, managing the board, managing up rather than working with the community. And so I was really excited when I was headhunted actually to join with Women's World Banking. It was a nonprofit organization that was committed to providing access to finance to low-income women in the developing world. And it just seemed like a great fit for what I wanted to do with my career and how I hoped to see finance as an instrument for helping people. And so I joined, and I've been there for the last 15 years.
Can you just tell us a little bit more about the incongruence between your personal values and the world of finance? What was amiss?
It's a great question. There's sort of a story I often tell. When I was working in an investment bank, the first deal that I got to work on, where I was not the most junior person on the team and I had an analyst working with me, it was an assignment to help a trucking company identify acquisition targets. And so the analyst put together a group of what they call pro forma balance sheets, looking at the existing company combined with the new company and would the deal make sense financially. And when he showed me the financial model that he developed before we went to see the client, I noticed at the bottom of his columns of numbers, there was this plug figure that kept changing as he changed the different elements in the transaction. And when I asked him what that plug figure was, he told me it was the number of people who would have to be laid off, who would have to lose jobs in order to make the transaction work. And, I often think of that as sort of my come to Jesus moment, because it's like, wow, that's not why I went into finance. It was actually quite the opposite, to be making economic opportunity available rather than taking opportunities away from people.
Okay, and then the other part of your life, you were working for the World Bank and you were uh, being involved involved more and more into the management and being taken away from the real work that you wanted to do. Can you just elaborate on that a little bit more, please?
Well, I joined the World Bank at a fascinating moment in history. About 4 months after I joined, the Berlin Wall came down, and I spent really the next decade working in Eastern Europe and then eventually the former Soviet Union. I worked on helping to rebuild financial institutions that had really become dormant over the years of communism, or in the case of the former Soviet Union, really building things from scratch, working on regulatory bodies. I worked very closely in several countries to create securities regulations and to establish stock exchanges. I worked on the first IPO that had been done in the Warsaw Stock Exchange. Sort of a fun fact, the Warsaw Stock Exchange was in the building that had previously been the KGB headquarters in Warsaw. That was kind of a, thumbing the nose at the Soviets. So it was such an exciting time, and you really were so conscious of being present in a moment of history that you weren't going to really see again. And I really enjoyed working with both the people on the ground who were building these institutions, as well as the eventual clients. I then worked actually in Latin America, including in Colombia for a short time. And then I moved to India, actually, where I was the regional director for the International Finance Corporation's operations in South Asia. And again, just as a moment in history, my fourth day on the job was 9/11. And I had responsibility for Pakistan at that time as well. And I spent much of that following year working on a transaction in Pakistan to create the first microfinance bank there, together with the Aga Khan Foundation. And so that was part of my real introduction to microfinance, to creating a message about the role that finance could play as being one of much more of hope and opportunity than other messages perhaps that were being delivered around September 11th. So it really became a way, working very closely on the ground really became a way for me to put some of the things that I had hoped to do and my ambitions and aspirations in place. And then after that time in India, I was brought back to Washington, and I, was given a very large portfolio, and it was very exciting, but it really didn't have that same sense of being on the ground, working with people, seeing how my work and the work of our organization was affecting their lives.
Okay, so you went from working with these large global portfolios, and now you are promoting the expansion of microfinance. I wonder if you could just define what is microfinance. I mean, it's hard for me to imagine the small quantities that are dealt with and how much importance is given to these small quantities. So, yeah, can you expand on that as well?
Sure, but maybe I can just start by saying that I think a large part of the book that I've written is about really sort of the limits to microfinance. The traditional microfinance model was about making sometimes very small loans to very poor people. They were, unsecured loans made to help them start or grow very small, informal, non-registered businesses. And within a few years, it became very evident that women were the beneficiaries of many of these loans, had fantastic repayment rates, and it really turned out to be a great model to prove that very poor people could indeed be bankable. But the reason I say there were limits to the microfinance model, and why I'm very engaged in working with a much broader range of financial products and services, is really, if the only thing that you received from your bank or your financial service provider was a loan, no savings, no insurance, no ability to make payments or send money, it just wouldn't be sufficient. And so women and men, and you know, everyone really needs that broader spectrum of financial products and services. And that's really what we're about at Women's World Banking now, working with the full range of financial service providers, banks, fintechs, insurance companies, yes, sometimes microfinance institutions, to make sure that women have access to all of those products and services.
I'm surprised at this. Well, I'm not actually surprised, but I'm curious to know why is there a higher repayment rate on women than men?
It's a great question, and there's a lot of hypotheses. I think that to some degree, women recognized just how difficult it was to get that credit in the first place. Perhaps men had more opportunities to gain finance. So if women had an organization who was willing to take a chance on them, they were going to do everything to make sure that they could repay that. We we saw that have a bit of a dark side during times of financial crisis where women might, make eat less, or have some of the family members eat less to make sure that they had enough money to pay. So we have to be really careful and responsible about how that money was lent. But I think women really recognized how rare and important that opportunity was when they were given it in the first place.
It is, it is. So you were headhunted by the Women's World Bank. Can you tell us more what that is? To be honest, before I stumbled upon your book, I never even knew that existed. So I'm sure I'm sure there are many of my listeners are in the same place.
So Women's World Banking is a global NGO. We are 43 years old this year. And as I mentioned before, since our founding, we've been dedicated to providing access to financial products and services to low-income women in developing countries. And the way we've did that for, say, maybe the first 20 years of our existence was to work with microfinance institutions to make sure that they had all the capacity and were strong enough to provide those financial services responsibly, not overcharge in terms of interest rates, not to be predatory in their collection mechanisms, make sure that they weren't charging excessive fees, to be really responsible members of the financial system. But about a dozen years or so ago, digital technology through the cell phone sort of burst onto the scene as a way of delivering financial products and services. And in that moment, so many other providers and players came onto the field because the cost of providing very small loans or taking small deposits or issuing small insurance policies became much, much lower. And so this market of customers became available to them. And so at Women's World Banking, we expanded the partners that we started working with. And so, as I say, we worked with the full range of cell phone companies and banks and insurance companies, but also now increasingly fintechs, those organizations that are using financial technology to deliver a product or service. So the field is now much broader with lots more players. Very exciting moment.
And how do you work with all these institutions by actually providing education and technical knowledge, or by actually giving funds, or a combination of all these options?
Great question. We work really in three ways. The first is providing technical assistance to these financial service providers to develop products that can serve women, to improve a product that they had hoped would serve women but isn't, to help them market the product, to train their sales force on why reaching women as customers is good business, sort of that whole range of product design, product rollout. And then in that same area, we do a great deal of research on what are the latest trends, how are women being affected by access to these products, and how can we learn from what the research is saying and fold it back into our product design work. The second way we work is by really working almost more at the systemic level, by working with regulators and policymakers to make sure that the financial system is friendly to women and that the environment is conducive to providing access to finance. And then the third is the other way that you mentioned. We are an investor in financial inclusion, financial service providers. We have two impact investment funds. One, our first fund was $50 million, and we're in the process of exiting from those investments. And then just the week before last, we closed on a fund of $103 million that's investing in these institutions. We've made one investment in Colombia, a fintech company there that we're very excited about. So it's really all three ways that we're working to make sure that women have access to finance and that the financial systems are friendly to them in an environment that's welcoming to them.
And what do you see as the biggest barrier for this to happen? Like, for example, in my country, Colombia, it is perfectly legal and normal if a woman searches for financial services, except that many times they don't have neither the knowledge nor the self-confidence. Like, for example, my aunt wanted a loan to buy a property, and she just had no idea. She would say, oh, the bank will never lend me money because I'm a woman, or because whatever, because I don't have a collateral. She had all the requirements, but she was just so afraid to see a banker and ask him for a note. So it was not illegal, but just because of cultural barriers and lack of knowledge of the financial system, she never did ask for a loan, and she struggled and borrow money from family and friends as opposed to borrowing money from a financial institution. And I know that that's the case with millions of women in my country, and not only my country, but in many others. So this is a huge battle, how to get women educated and have the self-confidence to say, yes, I can go and ask for a loan, and I have as much chance of getting a loan as any other man in my community.
Well, in a sense, you've answered the question. We see all too often that women almost second guess themselves. In the banking business, we call those reluctant borrowers. So they'll say, well, I probably don't have the right collateral. I probably don't have the right kind of business. Collateral actually is the number one reason that women will give for not for either not seeking and often not getting bank credit. And so we work very hard both to train banks in cash flow based lending, so that lending that's not based on seizing a piece of collateral if the loan goes bad, but tracking the cash flows from the business and making the repayments tied to those cash flows, and changing the way banks think about collateral, that in far too many developing countries, only property or land is available or is allowed to be used as collateral, whereas women are much more likely to own equipment or have even accounts receivable from their business that, say here in the United States, is the collateral for the vast majority of small business loans. So we're working both, against women's own issues of self-confidence and willingness to take that leap, as well as addressing some of those issues at the systemic level that really are there, that women are not mistaken in being concerned about.
Right, and talking about systemic barriers, I mean, there is also the barrier of culture. For example, I cannot imagine a woman from Afghanistan who's not even allowed to get an education nowadays to go into a bank and say, I want a loan, without her husband or her father or of a male family member to approve.
No, cultural and social barriers are very often the significant obstacle that we're working with. But in a lot of countries, there's a way to work with those cultural norms to make the business work for women. And I think some of our solutions in Pakistan, for example, and there's one company that we did some work with that really wanted to have more women customers for a digital wallet. So it was a cell phone based wallet for financial services, mostly payments related. And they determined that only 12% of their clients were women, and they really wanted to have more women. And what they thought they needed was a new product for women. But when we looked at their data, we saw that 12% of the women were using the same products men were, the same volumes. It was really working for them. But the way that the women actually onboarded into this company's product was by they had to go to small shops, 97% of which were owned and run by men. And in very traditional society, if they were sort of brave enough to go into that shop with the man, they then had to give them their cell phone number, which was absolutely not in keeping with the cultural tradition. And so we worked with the company to build a network of female shop owners who could
Right.
act as agents, and had a dramatic increase in women clients once the onboarding process included women that these women clients could feel more comfortable with.
In your book, you mentioned how COVID-19 has transformed access to financial services to women. Can you tell us how that happened?
So I like to think that COVID-19, which has had a very disproportionately negative effect on women economically, there is one small silver lining in that it has moved many more women into digital finance. It has put cell phones and smartphones in particular into the hands of many more women as more products and services, both government as well as financial services, have moved onto the digital platform. We've seen a real increase in women moving their businesses into e-commerce, which is very exciting. So we're starting really to see the a quantum leap in access to digital financial services. And we find that once women have access to the technology, their uptake is quite rapid, and we're seeing them expand beyond just the initial product, but to take on the full realm of financial products and services.
Wow. You also make the case that when a woman in a household is in charge of the household finance, there is an improvement all around. The economics improve, the nutrition improves, the education improves. Can you elaborate more on that? And of course, I do believe it, and I think everybody else believes it. It's just I just find it curious. It's why is it that everything becomes better when a woman takes care of the finances?
Well, we're not about bashing men or anything, but it's become really quite evident through research now over many years that when women do have control over financial resources, they tend to spend money on three main areas. Number one, and this is true across the world, education of the children. More children, so both girls and boys, and for longer. And women measure their own success and how well they've done in their businesses by whether or not they've been able to educate their kids. They focus on healthcare for the whole family, sometimes at the risk of not taking care of their own health. And they focus on improved nutrition and housing. And we just see this across regions, across countries, that these are the things women focus on when they have control over financial resources.
You also make the case that this is not charity, that this makes business sense for financial institutions. But my question is, where do you draw the line between making sense or taking I don't know what's the interest rate of, for example, a loan to a woman would be, or if it would be any different than a loan to a man. But I know they are higher than here in Canada, for example. So where is that line drawn between being an opportunity for financial institution, and where does it cross the line and becoming abusive and maybe usury?
Such a good question. And really, some of the rates that we saw in the early days of microfinance really could have been called usurious. So I think there's been a big movement towards consumer protection, making sure that when you're serving this more vulnerable population or population that might be living more on the edge, that there aren't unexpected fees, that the interest rates are, even if they're higher in order to cover the cost of the loan, they're completely transparent and explained to the woman by exactly how much they're they're going to be charged. We find often that what's very popular with women is bundling of services, and this can be a way for a financial service provider to make money without exploiting. So, for example, we've been very successful with bundling a micro insurance product together with a loan, and then the woman pays one payment, once a month that includes both the premium on the insurance and the loan. The exciting thing about that is there's some very good data that shows portfolio quality, so that the repayment rates of loans when a woman has insurance tend to be much higher, because you're basically saying you don't have to make a choice this month between taking your kid to the doctor and repaying your loan. And so they, there's some really important behavioral dynamics that we can learn that have consumer protection benefits to them, but can also be profitable for the financial service provider as well.
The title of the book is "There's Nothing Micro About a Billion Women," and of course, there isn't a billion women. It's a lot of women. How do you arrive to that number?
So, where the whole financial inclusion community is eagerly awaiting the latest numbers. There's a database that has been the sort of gold standard source of information around financial inclusion called the Global Findex, that will be released at the end of June. But based on the latest data, which is now a couple of years old, that there's a total of 1.7 billion people worldwide that have no access to finance, and close to 2/3 of them are women. And so that's where I get that billion number.
Well, Mary Ellen, and this is a fascinating topic. I wonder if you could tell us one more time the title of the book and where can the listeners find out more about the work that you're doing.
So the name of the book is "There's Nothing Micro About a Billion Women, Making Finance Work for Women." If you want to buy the book, it's available on Amazon and a bunch of other sites. My website is Iskenderian.com, and that gives a bunch of different places to buy it. You can also check out our work on womensworldbanking.org, and that'll give you a broader sense of the work that my organization is doing.
Well, in the name of my aunt, who was always too afraid to ask for a loan, I thank you for the work that you are doing. Thank you so much.
Wonderful. Thank you.